Welcome back to ET Now. Very good morning. You're watching Cap Masala with me, Kanishka Sarkar and Ashesha Dwaryu. This is a show where we'll tell you all that's been happening in the world of mid-cap. But let's get started with an eye on how the markets are shaping up. But Ashesha, what a day coming in, all-time high for both Sensex and Nifty.
Well, absolutely. What a day it has been, as you rightly described. Nifty at a fresh all-time high. Sensex too at a fresh all-time high. In fact, Nifty is now trading near that 26,277 mark. But clearly, it turned out to be a very solid session on Dalal Street. Nifty Bank, that one has also inched nearly 200 points higher in trade, trading near that 59,730 mark. In terms of individual stocks today, we have Bajaj Finance. That one is up 2.5%. The biggest gainer for the Nifty 50 index. That one should come up for you on your screens. L&T, Bajaj Finserv, Asian Paints, Shriram Finance, all of them gaining in excess of 1% in trade today. But let's now put the spotlight on Vikram Solar, because the company has gone ahead and commissioned a plant. To understand more about that, we now have Mr. Gyanesh Chaudhary, CMD at Vikram Solar, now joining us. Mr. Chaudhary, morning, and thank you so much for joining us here on ET Now. And first up, let's talk about the new 5 gigawatt Vikram plant that you now commissioned. If you can take us through what is the expected timeline for achieving 60 to 80% capacity utilization of the new specific facility, and any other details that you can share with us.
Hi, Kanishka and Ashesha. So nice to be here this morning. It's a great time for renewable and solar, and it's a great time for Vikram Solar as well. I think this plant defines a new standard and a new level of technology efficiency, as well as product quality for us. We hope to achieve scaled efficiency within the initial period of the next quarter, but we are ramping up very strongly with a great team, and with 2 decades of experience, module manufacturing for us comes quite easy.
So module manufacturing comes very easy. Hi Gyanesh, Kanishka here. Well, there's a very significant capacity addition, right? Now the total capacity, I believe, stands at 9.5 gigawatts. So what's the next target? Where does the order book now stand from that 11.15 gigawatt at Q2 end? So what's the capacity expansion and the order book target next?
So capacity expansion, we've already spoken about this at large. We will, by the end of this year, we will touch 15.5 gigawatt with a new capacity coming up in Tuticorin, near Tuticorin, and that will make us, one of the largest manufacturers. And as far as the order book is concerned, strong order book, but yes, obviously we are seeing pricing and overall change in the overall scenario as far as the buying behavior is concerned. But for us, the order book stands strong, and we hope to gain that strength towards the next quarter and the year ahead.
The order book position is very strong, and you're expecting that the momentum of order book will sustain in the second half of the year as well. But Mr. Chaudhary, also wanted your thoughts on the current PLI scheme. What kind of benefits do you aim to generate both for module manufacturing as well as for cell manufacturing? What is the status?
You see, India is setting up a very strong dual engine of growth for the solar sector. On one side, where we see the domestic market is taking leaps and bounds of growth. We see that in the earlier years, we were at about 18 to 22 gigawatt of deployment. The run rate now is at about 42. So we see that there is a tremendous growth in overall deployment for many reasons. So that is one part where domestic ecosystem is supporting this energy transition for India. Coupled with that, I think the global shift away from China has also played a very important role. And going forward, manufacturers like Vikram Solar will see that market also scale. Additional to that, I think we're not even counting the capacities that will come in with respect to green hydrogen, which is slated to add about 125 gigawatt odd additional capacity in the coming years, as well as the various government schemes like rooftop and other things. So we see that this is going to be a great time going forward for the growth of the sector, and we'll see deep commitments from manufacturers like us to deploy capital for expansion in capacity and utilization.
All right. So it's about the PLI scheme and the expected potential from it. But Gyanesh, your order book, it's very large right now. In fact, it's larger than your current annual capacity, if I understand correctly. So just wanted to get some clarity on the execution timeline for this over 11 gigawatt order book, and how much of this do you think is going to be realized in FY26 itself?
So as far as our delivery stands, these are multi-quarter and multi-year order books, and we hope that the lion's share of this order book will be met in the next 24 months, because next year we are with this additional capacity and the new capacity coming in, we should be comfortably reaching our target revenue and EBITDA levels for next year as well. Having said that, I think there are new businesses at play. There's new pipeline also getting added. So this number is always a moving number.
Okay, so that's as far as your order wins are concerned. But Mr. Chaudhary, also wanted your thoughts, because you're telling us that demand continues to remain strong. Order book pipeline is very strong. You've already registered about 2,200 crores of revenue in the first half of this year. What will your target be for the second half, and how much do you aim to end FY26 by as far as the revenue figure is concerned?
So I can talk about the overall capacity delivered number. Last year we were at about 2 gigawatt of delivered solar capacity, and this year we will hope to almost double it, and that will bring significant revenue upswing. Obviously, there has been certain corrections in the market with respect to pricing, but our profitability stays strong. Because of our deep, involvement with various different segments of the solar value chain. So it makes no difference, so to speak, in terms of our profitability. But we look at significant growth this year and also next.
Okay. That's about the demand momentum and the revenue visibility. But just wanted to understand, Ganesh, this new plant supports Topcon and M10, G12, all of these technologies, right? So what's the current demand split within your order book across these technologies, and how are you going to gradually phase out or minimize the production of older and less efficient module types?
So thank you for the question. This typically, Kanishka, what happens is, we front end our technology play much before anybody else in the sector, and I think this is the learning that we have received over the last 2 decades of being in the sector, and to be able to deploy the best-in-class product much earlier helps the entire ecosystem with respect to manufacturing, supply chain, as well as customers to align with this new product, which is higher in efficiency and higher in delivery. So Vikram was ready and deployed Topcon much before the market actually was ready for it. Today, almost 90% of India's deployment is Topcon, and we are 100% Topcon compliant, and we are producing near to 100% Topcon. But our equipment is also ready for the next technology, which is either XBC or HJT or any other technologies that are on the anvil.
So that's as far as the latest technological advancements are concerned. You said that demand is very strong, you're adding capacities, but what about margins then? They've been in that 19 to 21% band for the last 3 quarters. What is your guidance when it comes to margins?
My guidance for margins would be as follows. I think that because of supply demand mismatch, we have seen significant tailwinds in the last quarters as far as margins are concerned. But a healthy 18+% margin is what would be a good prediction. Vikram has been in a good spot in the last 2 quarters, and we continue to present our investors with solid profitability.
Okay, and this would be for FY26, right? 18% or FY27?
I think going forward, if we can maintain a healthy 18+%, we would be doing a great job.
Got it. Thank you so much, Ganesh, for joining us today and helping us with that perspective. And congratulations once again on your new plant in Tamil Nadu. On that note, we'll let you go.
Thank you, Kanishka and Ashesha.
Great. With that, it's time now to take a very short break on this edition of Midcap Masala. We'll be right back with more on the other side.